Yo, what's up, man? Welcome to episode one. So I went live a couple days ago, and I was starting with TGR's boot camp, his old boot camp, and I was gonna start streaming that. Try to get some content out to y'all twice a week, but things just weren't flowing how I wanted it to flow. So I kind of went back in the tool bag and kind of was looking at ways that I could get this content out better for y'all, but learn on a faster pace. Um, and then it was brought to my attention that he actually started a brand new path to profitability series where he explains trading a lot better. I think it's more in depth. It's easier for beginners. So we're gonna pivot to that, man. We're gonna pivot to that and see what this is all about, man. Learn together. Um, I already watched the first two episodes. He was more so just talking. Video two was basically just breaking down what trading is, and in a nutshell, it just talks about like the mindset of trading, and the main gist of the video was what is day trading, and he kind of broke it down, but to shorten it up, day trading is having the ability to predict where the price on any given asset class will go with high probability on a daily bias. So if we break that down, day trading is having the ability, the skill set, whatever you may call it, um, it's having the ability to predict, not guess. We're looking at charts, we're looking at indicators, we're learning how the charts move, how buyers move, how sellers move. So we're educated in every move that we're making. We're not just looking at charts guessing. So we have the skill to look at the charts and analyze the charts and predict where the price, whether it's going up or going down on any given asset class, which would be the stocks, if you will, to make it easier, um, to predict where those will go on a daily basis, and we want to do that with high probability. That's how you become profitable. Yeah, man, that was pretty much his first two videos. So we're gonna start with video three. My main goal with this is to learn the skill through this boot camp, or not boot camp, path to probability series. Uh, to learn the skill of day trading and become profitable, obviously. But I also want to make content and build a small community, man, and learn with each other. The more, the better. There can't be too many traders. Everybody can trade, and there's money in the market for everybody. So having a small community for us to bounce ideas off each other, bounce trade signals, whatever the case may be, um, teaching each other, man, and just creating a small community of profitable traders, man. And that's my goal with this. So without further ado, let's get into the video, man.
But for us, we are actively trading price, right? That's how I explain what trading is. That's what day traders do. We are just trying to buy low, sell high, buy back low, right? And that's how we're going to make money. Obviously, there's going to be mistakes involved, but in order for us to do this, we have to be able to see price. And this gets us to Trading View, okay? So this is the first time that you guys are going to be looking at a chart. What I want you guys to do, whether it's during this video or after this video, whatever, you guys can follow along with me. You guys are going to go to tradingview.com. This is the only kind of charting platform that I would use for active live charting. Okay, there's a couple backtesting softwares that we'll get into much later down the line in this series to help you guys practice this skill set. But in terms of live trading and reading the live market, TradingView by far has the cleanest UI. Everybody in trading uses it. I literally don't know anybody that is an active day trader that doesn't look at TradingView charts. So when you guys go to tradingview.com, it's not super overwhelming. You'll see a get started for free tab right here. I'm going to click this and then all my information is going to pop up. So I'm just going to put my face back over the screen real quick and then click on this. My chart, I actually have already programmed this to make it look this way. So I want to see if I can reset this to the base.
Okay, I'm gonna.
So
see me,
your guys's
y'all
will
see
be
me
looking
down here.
something like this.
Got my chart
okay?
on my bottom screen.
And you guys will also probably have some graphs on the back.
So make sure y'all adjusting y'all settings, man. This is important.
We'll have something like
when we're
this.
Into,
you guys will
reading the
have
charts and having a clean layout.
this is pretty
so
approximately what your guys' chart will look like. Again, very overwhelming, overstimulating. So you're going to do exactly what I did, and we're going to reformat these chart colors. Me personally, I do not like having green and red candlesticks on my chart. If we go continue on this. So if we look at what my actual chart looks like, it looks like this, right? And if we go to the chart settings, you guys can do one of two things. You guys can copy my settings if you guys want to use the same candlestick colors as me, but I like to avoid using the green and the red candlesticks for one reason. It's because the colors of green and red negatively affect our psychology when we're trading. Like we talked about yesterday, we need to find ways to be able to disassociate ourselves and our mental from the connection to money. And unfortunately, on trading, a green candle, what do we associate that with? Making money. A red candle, what do we associate that with? Losing money. Even though we're going to be taking long positions, so buy positions, predicting that the market's going to go up, and sell positions, short positions, predicting that the market's going to go down. But regardless, the colors green and red are just known psychologically to affect how we think about money, and in turn, that's not good for us psychology wise. So I use pretty neutral colors. I use blue and black. I know there's some people that will do like white and black and then change the background to something like a gray. You guys can choose whatever colors you guys want. Okay, this is how I have mine set up. I have blue and then black all the way through. And then on the back, I have just a solid white, no grid lines. This is what my crosshair looks like. And then really everything else is kind of, not really needed. But what I also want you guys to do is notice right here where it says time zone. Okay, we are going to set our time zone to New York time. Even if you guys are in Africa, if you guys are in Brazil, if you guys are in California, we need to be on Eastern time. Our brains, everything just needs to be programmed to Eastern time. Well, you're probably saying, well, I live in Africa and I don't live on Eastern time. Well, the market lives on Eastern time. So in turn, we have to live on Eastern time. At least our charts have to live on Eastern time, because when we're explaining market open, I'm going to say, hey, market opens at 9:30 a.m. Eastern time. For me, living in Puerto Rico, market opens at 10:30 a.m. Eastern, 10:30. See, I'm saying Eastern time because my head is so just built to be on Eastern time. But for me, market opens at 10:30 a.m. Puerto Rico time. But on the charts,
this
market opens at 9:30 a.m. Eastern time, and we just need to be on the same time zone or time frame.
These may be little things that y'all think
the market, because when we're explaining session opens, session closes, like when does the New York Stock Exchange open, when does pre-market open. I don't want you guys to be on Sao Paulo time, okay, and me saying, hey, market opens at 9:30. And for you guys to be putting a line at market open, but you're on Sao Paulo time and I'm on New York time, and you're like, hey, the strategy doesn't work. And it's like, well, yeah, because you're 3 hours behind, or you're 2 hours behind. So we need to set this to New York time. All right. And once we've done that, okay, we're going to have, let's reset this and let's remove this. Okay. We're going to have something that looks like this. Now, again, this can be very daunting, and I don't really want to talk about how do we even figure out where the fuck price is going to go off of this. We're going to learn that in due time over the course of these next 2 weeks. Okay, we're going to be figuring out hey, price comes up, took out this high, and then went down. Why did that happen? I could explain that all to you right now, but it would be a little bit confusing. So we're not going to talk about that right now. We're going to talk about what do each one of these candles represent, how can we identify highs and lows in the market, and then how can we identify trends in the market? Because that's the first thing that we need to do. It's the bare minimum, because on these charts, every single one of these charts, no matter what time frame you're on, whether you're on the daily time frame, the weekly time frame, the hourly time frame, these candlesticks make up and show us every single second of price movement throughout the day, throughout the hour, throughout every single 5 minutes. And if you guys are unable to understand the Japanese candlestick anatomy,
So a lot of this beginning stuff is
then
just us watching, learning.
it's like we're not even going to be able to go
As we
anywhere.
get more
Okay,
into the
that's another
videos
thing.
and start
There's a
doing stuff
bunch
on
of
the
different
charts,
ways to
you
read
will
these
see
charts.
me
Okay,
actively
there's
on the charts doing
bar,
stuff.
there's bar candles, there's hollow candles, there's volume candles, there's line
first couple
charts, there's
episodes,
step
it's more
line
just
charts, there's columns, there's
something
high lows,
information.
there's volume footprint. All of this stuff.
Learning
There's
the basics.
Heikinashi candles, there's Renko candles. Okay, all of these different types of candlesticks. But for us to be able to read the market, Japanese candlesticks are by far the most valuable, because they tell us 4 different things about every single time frame. So what we're going to do is I'm going to draw out a candlestick for us here. This is going to be a green candle.
All right, I'm gonna explain this once he draws
Okay,
it out,
so
just to save us a little bit more
this
time.
is what
Actually, let me see if I can fast forward this a little bit. Boom. Okay, boom. So I can let him explain it, but kind of want to do a little talking myself. So we have a candle right here, right? This will mark out a time frame, whatever chart you're on. So can't see what time frame. He's on the daily chart. So this candle here, if you're on the daily chart, that means every candle represents one day within the market. If we're looking at the candle here, this whole candle from here down to here and all of this represents 24 hours within the market. So on a green candle, because there's a difference between a green and a red, obviously. So on the green candle, market price opened here at the bottom of this candle. This was as low as price went throughout this 24-hour time frame. This was as high as price went throughout this 24-hour time frame. And price closed. This is where at the end of the 24 hours, this is where price was. So beginning of 24 hours, high is this, low is this, end of 24 hours, close here. Now if we switch over to the down candle, we have the beginning of the 24 hours starting here. This is where price opened. When it's high is here, as low is here, and closed at the bottom of this candle. So this whole 24 hours, again, started here, ended here. When it's low and it's high, it's the top and the bottom of the wicks.
we are on the daily time frame. If you look to the right-hand side, you can see the time that is left for this candle to close. So this candle is still forming. So let's do a little lesson right here. Where was the open of this candle? This is a down candle, right? So the open was right here. Okay? Where the body is, where the body starts. At $25,478. Where was the highest point that prices got to within the past
shows you where price
19
is
hours and 30 minutes that this candle has been open, right? Because it hasn't been a full 24 hours yet, or else this candle would be closed and wouldn't still be forming. The highest point that this candle has gotten to, look at this, snail trail. Oh, price came all the way up here to $25,806. And throughout the 19 hours and 30 minutes, where was the lowest point that price has gotten to?
All the way down.
Right here, the bottom of the wick,
Yes,
at
sir.
$25,294. And right now, at this point in time, where is price currently? Well, we can see it on the right-hand side. It's at
Right here,
$25,391.50. Okay?
So I hope this makes
So
sense.
each one of these candlesticks represents a
This is
day's
definitely
worth
broken down
of price
way
action.
better
So we can look at yesterday. Where was the high? Where was the highest point that yesterday got to over the course of 24 hours? Right here at $25,716. Where was the open? The open was right here. So price opened at $25,683 at the start of that 24-hour time period. Where was the lowest point that price went to during that 24-hour time period? Down here at $25,429. And then at the end of the 24-hour time period, where did price close? It closed down here at $25,456. So this gives us a very good look, again, as we were just explaining, of what price did throughout 24 hours. Now let's say we want an even closer look. Well, we can just go down into a lower time frame. So instead of looking at things on a 24-hour scale, we can look at things on a 4-hour scale. Now, by me changing the time frame, what does that do? Now, instead of every single candlestick representing a day's worth or 24 hours worth of price action, now every single one of these candles represents 4 hours worth of price action.
And as we're trading, we'll get in, like, I'm sure he'll get into this later on, but as you're trading, some of the strategies you flip from like the 4-hour chart to the 15-minute chart, or you'll look at the daily chart and go down to the 5-minute chart. Like, there's every strategy is different, and like I said, we'll get into that later, but being able to decipher from the different hourly charts is very important when trading.
Okay. So now, with that in mind, we can say, all right, we know that every single one of these candlesticks represents 4 hours of price action. And then on the right-hand side, what can we see about this current candlestick? Well, when did it open? It opened around 2 hours and 30 minutes ago. Okay, because it has an hour and 25 minutes left for it to close. If we look at the candlestick beforehand, during this 4-hour time period, where was the highest point that price went during this 4-hour time period? Up to here. Where was the lowest point that it went to during this 4-hour time period? Down here. And if we zoom in real freaking close, where did price open? This is a bullish candlestick or an up candle. It opened right here, right? Because it closed up. It's a blue candle. So we know that it opened lower and then closed higher. So it opened at $25,730. And then where did it close? Right here. So during the 4-hour time period, it opened right here. During the 4 hours, it got all the way down here. And then also during the 4 hours, it came all the way up here.
For those of y'all that,
but at the end of the 4 hours, it closed right here.
The doji candles, man.
What happens if we scale down to the 1-hour time frame? Now we can see, look at this. If we go to the 1-hour time frame, we can see that 4-hour candlestick. Instead of just in one candlestick, we can see it in 4 candlesticks. So we can see that 4-hour candlestick opened on this hourly candlestick, and then there's 1 candle, 2 candle, 3 candle, 4 candles. So every single one of these candles, it's showing us the same price movements, but now we're on the hourly time frame, so we can see even a deeper look of, okay, we know exactly what price did during those 4 hours, but what if we want to see what price did during every single hour within those 4 hours? Well, now we can. We can say, okay, price opened right here during the first hour of those 4 hours. The highest point that it got during that first hour was up here. The lowest point that it got to was right here. And then after the hour was up, it closed right here. And we can get even lower. We can see, okay, over the course of that hour, we can see during 15 minutes. Okay, so now we have 4 candles that are showing us 15-minute time intervals that happen during
1 minute
that
chart.
hour that we were just breaking down.
And
you can go as low as
people
possible. You can see 5 minutes. You can
trade
see
on the lower
1
time
minute.
frame, so they'll start out on like a 4 hour.
Where every single one of these
daily
candles
chart,
is
whatever the
showing
case may be,
1
and then they'll
minute's
drop down
worth
to
of
the-
price movement.
to the 1 minute, 5 minute, 15 minute time frames.
And it's all showing us the same thing. So on the 1 minute, okay, if we look at this 1 minute chart, there's no difference in the price movement besides the number of candles that are on the screen, right? Because if we scale this back to the 5 minute, we're still seeing the same price movement, but just on bigger candles because they're representing larger times. If we scale back to the hour, it's still showing us the same time movement, just bigger candles because each candle is representing a larger period of time. And then if we scale all the way back to the daily time frame, we can see 1 day's worth of price action encapsulated in one candle. Now, I'm going to get in deeper as the series goes on what time frames are going to be beneficial for us, what time frames we want to be looking at, all of that stuff. But I don't want you guys to get overwhelmed today. I know when I was watching my first video explaining candlestick anatomy and time frames, like
hopefully,
I was freaking out.
Those of you that did,
all you guys are probably freaking out right now.
And I'm gonna be streaming.
Don't worry, take a deep breath. It's all going to be okay. You're going to understand this very soon.
Much easier
there's no reason to get overwhelmed.
Hit record instead of having to try to plan the whole stream.
There's no reason to get overwhelmed because I know you guys are probably thinking, how the fuck am I supposed to remember all of this? Trust me, eventually it's going to become second nature. Just like basketball, like you learn how to dribble a basketball, you're bouncing it off your foot, you're hitting it off your knee, and you got to look down to make sure that you're dribbling it correctly. But eventually, once you get good, you're not even looking, and it's just second nature. You put the ball on the ground, and you know exactly where it's going to come back up to your hand. You're hitting it between the legs, and you don't have to look down at the ball. Like you're able to do all these moves, like subconsciously, without even having to think about it. So that's eventually where you guys are going to get to. Don't worry. Right now, this seems super overwhelming, but don't worry.
As you starting out, just start looking at the charts, man. Start playing around with the charts. Go in there, just explore trading view.
And have 0 DUIs in the last 5 years.
Explore trading view. Explore all these things. Educate yourself before coming to these videos, man, so you can kind of be a little bit familiar with what's going on and what he's talking about.
Now, let's talk about, now that we understand candlestick anatomy and a little bit about time frames, we are going to talk about highs and lows in the market. Now, we need to understand highs and lows in the market because this is going to be very key in our strategy and understanding where price wants to go and being able to predict price action with a high probability on a daily basis to make us good traders. I'm going to explain to you guys highs and lows right now. So let's just think, if you guys think about a high and a low, typically what does, if you were to just imagine, what does a high consist of? Well, is it just constant moves up forever and always? Well, not really, because in order to establish a high, what do we need? We need, I mean, not price, but really anything to give us a peak, right? And it's the same thing with trading. So we can't just move up forever and always. There's always going to be
going up, down,
a move up, and then eventually followed by a move down. And following the move down, that's when we create these peaks. And those are highs. Okay, and then if we think about a low in the market, it's the same thing. We can't just move down forever and always. Eventually, we are going to get a move up. And then this looks like a low. This doesn't look like a low, right? Because it's like, where's the low? Where does it end? Moves up, or a high, we'll do high first. A high consists of a move up followed by a move down. A low consists of a move down followed by a move up. Okay? Pretty simple concept, right? It's just a high is a move up followed by a move down. A low is a move down followed by a move up. Congratulations, you guys know what highs and lows are in the market. I know. Probably the most difficult thing you've ever learned. This is This
Yes, sir, T.
learning this is going to help you make more money than your college education will ever be able to get you. Believe it or not.
Oh.
Now, why is this important? Because highs and lows make up trends in the market. Now, this is important as well because trends are what move the market, right? There's uptrends, there's downtrends, and then there's consolidation. Okay, so we're going to talk about 3 different ways that the market can and is able to move. And it sounds dumb, but it's true. Okay, the market can move up or down, crazy, right? Or sideways. Okay, and there's 3 different ways to identify whether we're there's ways to identify whether we're moving up, whether we're moving down, or whether we're moving sideways. And the way that we identify that is through being able to identify highs and lows in the market. Now, like I was just mentioning, a high and a low consists of a move up and a move down. A low consists of a move down then a move up. Well, how are we supposed to identify a move down and a move up? Well, awesome. We just learned about candlesticks. So what does that mean? Well, we need an up candle followed by a down candle to create a high. We need a down candle followed by an up candle to create a low. So let's go on here and let's look for them. We have an up candle followed by a down candle. Awesome. That's a high. We have a down candle followed by an up candle. Awesome. You take the lowest point of those 2 candlesticks, so whichever wick is lower, boom, this is a low. We have an up candle followed by a down candle. We take the highest point of those 2 candlesticks, so this is the highest point that this candlestick got to, but this is the highest point that this candlestick got to, so this is our high. Again, I don't want you guys to get overwhelmed, but what I want you guys to do is to be on your trading view and mark out 5 different examples of a high and 5 different examples of a low.
Easy.
So we have a move up, then a move down. What do? We mark the high.
Let's do it, man. Let's do it while we're right here. Why not? So let me bring my chart up here. So if we're looking at the chart, up candle followed by a down candle. Wick is up here. We have a high. Down here, we have a down candle followed by an up candle. Low wick down here. This is a low. Same thing here. Up candle, down candle, high. Down candle, up candle. Wick down here is a low. We don't need to find 5 examples. I think y'all get the gist by now.
Highest point of those 2 candles. Which one has the higher wick? This first candle does. Awesome. This is our high. We have a move down, then a move up. Lowest point of those 2 candlesticks. Boom. This is a low. Now, to be able to identify trends in the market, now that we know how to identify highs and lows in the market, we need to be able to identify a series of highs and lows that form a pattern in the market. Okay? So how do we know when the market is moving up? The market will form something called an uptrend, which consists of higher highs being created and higher lows being created in the market. So when we're moving up, the market will form an uptrend. And an uptrend looks like this, where we come up, we make a high, and then we come down and we make a low. And then we come up, make a higher high, come down, make a higher low. Come up, make a higher high, come down, make a higher low. Higher high, higher low. If we look at the S&P 500 over the course of months, right, we can see that this follows a pretty strict pattern of an uptrend, right? That's why everybody invests in the S&P 500, right? We can see a low right here. We can see a high right here. We can see a low right here. What is this? Low, higher low, high, higher high, higher low, higher high, higher low, higher high, higher low. We have the COVID move down, but we'll talk about what this is on a later date. Higher high, higher high, higher low, higher high, higher low, higher high. Okay, so the S&P 500 is just forever and always, at least on the high time frames, in an uptrend. That's why a lot of people invest their money into it, because over the course of a long period of time, it just keeps going up. Okay.
Food for thought.
Now, that's an uptrend. That's when price is moving up. Okay, we know that price is making higher highs and higher lows in the market. Now, what happens when price is moving down? Well, it's the same thing. When price is trending down, we are making lower highs and lower lows in the market. So if we're moving down, we make a low, then we make a high, then we make a lower low, then we make a lower high, then we make a lower low, then we make a lower high. So there's a low, there's a high, lower low, lower high, lower low, lower high, lower low, lower high. And that is a downtrend. That's how we can spot the market moving down. Now, if we look here, let me try and find a good example of a downtrend. And this is decent. It's good enough at least. Okay. Don't look at any of this on this side, because we'll get into like how we can actually decipher all of the price movements and break of structure and how new trends form. But right now, I just want us to be able to spot trends. We have a high right here, move up, then a move down. We have a low right here, move down, then a move up. What do? We come down, we make a lower low, move down, then a move up. We come up, we make a lower high, move up, then a move down. Come down, make a lower low, move down, then a move up. Come up, make a lower high, move up, then a move down. Come down, make a lower low, move down, then a move up. Come up, make a lower high, move up, then a move down. And right now, we are in the process of putting in a lower low. So this is a very distinct, very easy to tell that we are in a downtrend, because we have a high, we have a low, we come down, we make a lower low, we make a lower high, we make a lower low, make a lower high, make a lower low, make a lower high, make a lower, even lower low. And this is how we can identify trends. Now, trading is not as simple as saying, hey, we're in an uptrend, I'm just going to blindly press buy, because trends can break, trends can change, okay? Just because we're in a downtrend doesn't mean, hey, I'm going to press sell right now because we're in a downtrend and price is probably going to go lower. That's not the case. But in order to predict where price wants to go with a high consistency and a high probability on a daily basis, because that's what we're here to do, we need to be able to identify these market trends and be able to at least see them on the chart and be able to understand them. Okay? So we learned a lot today. I kind of want to end this video here, but you guys have homework. So what I want you guys to do is, first of all, obviously, set up your guys' TradingView account, choose some chart colors that you enjoy, make sure that it's set to New York time, because that's how we're going to be operating for the rest of the series, regardless of if you live in Africa, regardless of if you live in Mexico, you need to be on New York time. You need to start programming your brain. Hey, if I want to be an actual day trader, then I need to be on New York time. I need to be on EST. Okay, at least your charts do, bare minimum. Okay, the second thing that I need you guys to do is, once you guys get set up on TradingView, I want you guys to just literally just play around with these time frames. So rotate from like the 4 hour to the 1 hour and see, okay, yeah, there's 4 1 hour candles that encapsulate a 4 hour candle, and practice identifying the open, close, the open, high, low, and close of every single candlestick, and being good at identifying that. The next thing that I want you guys to do like 5 reps. If even more is even better, okay? You know, like the more work and the more effort that you guys put in is going to be better for you guys. What else I would like you guys to do is I want you guys to identify 5 highs in the market. So 5 up candlesticks followed by a down candlestick, and finding the highest point of those candlesticks together. 5 lows in the market. So move down, then it moved up. Okay, find the lowest point of those 2 candlesticks. Identify 5 uptrends. So a series of higher highs and higher lows being formed in the market.
MacBook,
I want you guys to spot 5 downtrends. So a series of lower highs and lower lows in the market. And then from there, we can go into tomorrow's video. So that being said, love and appreciate you guys. Today was rather beginner friendly, but as we start.
But that's the video, man. You know, simple. Started out very simple, just getting down the basics of reading candlesticks and reading trends, uptrends, downtrends, higher highs, lower lows, simple stuff. But very important when you're getting into trading, you're starting out trading. It's just like with anything. Like he brought up the basketball thing earlier, the comparison. When you're learning a new skill like basketball, you don't just start out between the legs, cross, shooting three. Like you start off learning how to dribble, then you learn how to do a crossover, then you learn how to do a between the legs, then you might learn how to do a between the legs crossover, then you might learn how to do behind. It's all a gradual. You learn the basics and you go from the basics and you just complicate things as you go, and as you learn and become familiar with it and comfortable with it. So yeah, man, that was episode 1 of this series. Definitely learned some basics. If you haven't already, hit that sub button, hit that notification bell. Make sure that y'all got the notifications on so y'all will see when one of these videos drop. Go follow me on Twitch. All my handles should be Peyton Allen _X, I believe, or Peyton Allen X. I put those in a link in the description. That's end of episode 1, man. I'll catch y'all in the next one.